Believing that he's an animal he thinks he has the right to kill.
Testing on the mic, testing on the mic. Looks like it's coming through. Okay. All right. Welcome. Welcome, everybody, to this week, May the 6th, 2022. What a week it has been. Last week was really, really crazy. And actually, hold on just a second. I actually think I need to make a phone call. So let's keep on watching this real quick. Sorry. I'll tell you why this phone call is really important in just a second. So let's just go back and look at this. Hang on. Okay, that's fine. Thanks. Okay. All right, I'm back. And that is going to be one of the story times that I'm going to have for you guys today. Very cool thing happened to me this week that has to do with investing. It's a personal story, but it has to do with this real estate market and how you never know when something crazy and awesome is going to happen. And that was a call from a seller. But let's just go ahead and hit the high points. There's a couple things I want to talk about, of course, with cryptocurrency. There was some really cool news for me and my thesis about Bitcoin. This is going to be about Michael Saylor. And then, of course, with the S&P 500 futures, which we're looking at right now, the key level that I've been watching for weeks and weeks, that is the February the 24th low. And oh man, look at that. Look at that. Look at that. Let me resize this. So yeah, I've been keying off that low for 2 months. Well, February. So yeah, 2 months, almost 3 months now. SPY, let's take a look at that. I mean, that's really going to been the key level that I'm going to look for price action to close on a weekly time frame above or below. And anything short of that is going to be a false breakout. And so, man, it's just been from the beginning of this year, from January the 24th to February the 24th, the Russian invasion of Ukraine. And then now today, this week, Fed, FOMC, they basically decided to not do anything different. Literally, the market went up because no more bad news came about, but then it sold off again. So a lot of volatility coming in. So we got to look at the VIX. We got to see what it's telling us. Also want to talk about a big thing I want to talk about is also the classic model of bond versus stock portfolios, which I think a lot of boomers have a lot of their financial futures resting upon. So yeah, welcome. Happy Friday to everybody. If you are joining, I like to talk about what you guys want to talk about. So make sure that you post it in the chat, either on TradingView, YouTube, or Discord. And so that's going to be really, really key to keep things going along. And then, of course, I got a hard cut, as always, at 5 o'clock. So let's talk about stocks first, and then we'll jump into crypto and hit all the other things. So just a real quick high level. Like I said, I've been watching this low, the February the 24th, February 24th low on SPY. This set up in itself a false breakout. And so the fact that it recovered so quickly from this, that gave me reason to think, okay, well, that was just a false breakout. That was the correction that we needed after a big bullish year of 2021. And man, it just keeps on this week. It just kept on poking against that low, could not close below. Hey, anything can happen, but this is the reason I wait for closing prices to make decisions, is because first of all, it makes you patient, and second of all, it tells you like what was the actual end result of this price action that we saw this week. And I think a lot of people, including myself, have taken a little step back. I know this week I have definitely taken a step back from trading. I'm still doing my daily scans as much as I can. That's not exactly true. I missed an opportunity on Monday because I just didn't want to look at things on Monday. It's okay. In my years of experience, I've taken time off to compose myself. And it's funny because this week something really cool happened to me. And I want to tell you guys about it. I actually posted the story, I actually wrote the story about it on Discord on into the real estate channel. I want to have it up there for posterity. I think it's a really cool story for those that want to read it in full. But I'll tell you about it in just a second. So, and of course, the NASDAQ, it is, of course, making lower lows. And that's tech heavy. Of course, Google and Amazon. Google's holding up, but Amazon just keeps bleeding, unfortunately. Um, Waste Management, one of my winners, doing pretty well. ExxonMobil, actually this week made a new high. Let's get out of that blue screen. Let's look at my normal screen. I don't know. Actually, you know what? I kind of like this. I kind of like the color. We're going to keep that. And so Apple, pretty much doing nothing. Coca-Cola, sugar water, one of the best trades of the year apparently, and it still keeps going up. What was another staple? It's just basically energy and utilities this week. If we look at the sectors, the ETFs, which by the way, I posted a video about sector rotation, what's going on right now, why I think financial sector is coming up. I posted that on Best of Us Investors YouTube channel. I'm actually going to be doing some more editing work for those videos, so I'm going to get some more creative control there. So I'll keep posting there. But XLP, which is the consumer staples, up a little bit today. XLE up almost 3%. That's energy. And XLU utilities, 0.8%. Everything else taking a dump, but we're still in that nervous market, flight to value type of sector rotation. And so that is stocks. Let's look at crypto. Later, I'm going to talk about some of the themes that I wanted to talk about. So, really, I'm going to start with Ethereum here because it seems to me that a lot of the market was predicated. This recent rally that we had at the end of March, this rally right here, got up to that key 50% retracement there, 3,500 on Ethereum, and then the whole market turned over. And of course, Bitcoin did something similar, came up, didn't quite hit its 50% retracement. I thought we might get like a 51K. We did not. One thing that I watch a lot for a good friend of mine is Solana. It's hitting up against this support right here. And man, that's a dangerous business to be in. Really, I'm gonna switch back to where I have my indicators here, but Ethereum on the daily, a couple of things that I look at. It had a chance here on April the 25th, Noah talked about last week, to go up. But since then, it broke below it, and now you still have a sustained move down. So I really think that Ethereum is going to come back down and retest the lows of earlier this year. If we do a little bit of an Ichimoku analysis, momentum, which I look at to confirm a bearish trend, is about to come outside of the cloud to the downside, and that's going to confirm that this is now bearish, in a bearish trend. That's a very simple tool that I use to validate it. It served very well. I actually made a video on my channel where I went back through Bitcoin over the last 10 years and tested and showed that if you look for the daily Ichimoku cloud with the basic settings, in other words, the classical settings written in 1930, not the ones that are better for cryptocurrency, as they say. If you use that strategy with the confirmation of momentum, the Chikou or lagging span, as it says in TradingView, if you wait for those setups, then you actually outperform a simple hodl strategy. It varies, but for right now, it does seem to be. So if you notice when it did the same pattern back here in January of this year, let's resize this a little bit and clean this up. So basically, January of this year, you knew even if you weren't listening to me in November when I said, "Hey, if this thing was going to go, if crypto was going to go up, it should have gone quickly and with force." The fact that you did not have it go up with force, I mean, look, people want this. Everybody that was buying over the last 2 years, they wanted this kind of price action, up and to the right in a hockey stick. Okay, so that will get you to what you imagine if you were, for instance, buying Ethereum at $4,000. If you buy Ethereum at $4,000, you want it to go to 100,000, right? Come on, come on. And so you need that hockey stick. And so the fact that it stalled, I tried to tell people, I tried to warn people. Anyway, here we are. We're in the current market. And so when we crossed price first down below the cloud, let me clean this up a little bit. Let's go back in time right here. So price closes below the cloud. December 17th, 2021. Momentum, so there's the close below the cloud. Momentum, not quite yet. And so what you want to do is you want to wait, and you want to wait until, boom, you have price and momentum on the other side of the cloud. It lets you eliminate everything else, and now you're in a confirmed bearish trend. And so right around this time in January, the beginning of the year, there was your warning sign if you missed in November to avoid this kind of drawdown. Now, it hasn't been super strong, the bearish movement. I mean, it went down a good amount, but then you see when it got back on the upper side of the cloud, momentum got out as well. There's your bullish trend, but it smacked up against that resistance just within 2 or 3 days. You knew it. And now here you are about to resume, probably this weekend, this confirmed bearish trend. Bitcoin, it has already broken on the lower side of the cloud. It did this a few weeks ago, about 2 weeks ago. Yeah. So it got out. It's coming down to retest its lows. And that is going to be, that's not going to be good for the bulls. My thesis, I know a lot of people don't want to hear it. It's been the same thing since November. It is, we are entering, or then we were entering, we are in another cryptocurrency winter, another crypto winter, another bear market. My target has always been 17K Bitcoin. And that is very difficult for people to accept because, well, they didn't expect that. They didn't expect the people that bought it at 60K for it to be now at 35K. And the people that are buying at 35K don't expect it to go to 17K. Nobody expected to lose half their fiat relative wealth in this investment. But that is the risk profile that we're looking at right now. I mean, it could go up from here. This could be a great buying opportunity. But what I want people to understand is that that is your risk profile. You are putting at least a 50%, at least a 50% drawdown potential at this buying point based up, and why I base that, for those that might be new, is because I've seen, well, except for when it was in like the minor things, I've seen every Bitcoin pump and dump for the last 10 years since 2011. So 11 years. The best case, the least it went from top to bottom was 75%. And the worst case has been 85%. And so that basically puts you anywhere from 17K to 10K. I don't want it to get that way for many of my close friends that are heavily invested in it. I myself am hedged. That means that I am net short. So I am talking my book. But that is the danger that faces you now. And I know there's a lot of people out there. And what gives me hope is that there's a tremendously strong community of hodlers that the mantra is stack sats. Satoshis are the most, the lowest divisible unit of Bitcoin. And it's good because if you just focus on how many satoshis you have and you don't worry about the price, then it lets you have a good mental framework to that. But it's interesting. I've been attending a lot of these these developer meetings, and just as always, there's nothing new. There's a lot of debate going on in the Bitcoin community, among the Bitcoin maxis, of course, but also the developers and where they want to go. There's actually a little bit of talk, and I may be butchering this at the time, but they're trying to incorporate some sort of a smart contract type of system in Bitcoin. It's always kind of had something like that, but they're trying to, in some respects, make it competitive to Ethereum. And of course, people are starting to realize that Bitcoin maxis in particular, Bitcoin is the one true currency. It is the one true faith. And it's very interesting how it's taken on a religious aspect. But I'll just attribute that to people. I would be shocked if it goes much below 28K. Honestly, stopped out, I would be shocked if it didn't. And the reason is so many people, it's a very crowded trade, okay? Only a minority of people, only a minority of investors get outsized gains. Maybe the millions of people, which there are probably millions of people that are there's definitely millions of people that are invested in cryptocurrency, the whole market. Maybe that these millions of people will become millionaires. But I don't think so. It's just not how historically markets work. Markets have this tendency. I really enjoy looking back at history. Got back to the turn of the century. No, the 1800s to the 1900s. We're talking about the 19th to the 20th century. Railroads were the big craze because they were the future. They were connecting the United States from east to west coast, right? And stocks were how these railroad companies were issuing. They were issuing stock to fund these construction, and people were throwing money left and right. But what they didn't see coming was the car. And just in general, there was just so much money that there was a lot of inefficiency and redundancy. So right around the teens, I believe, I'm rusty on the exact timeline. Railroad stocks, which for many, many years were the thing. There was one railroad stock. It's in Jesse Livermore's book, How to Trade in Stocks, I believe. That book is literally called How to Trade in Stocks. It was written in like 1930s. It was actually, or the 20s, or I don't know. Very good book. You should have it in your collection. 100 years later, still applies. I think there were railroad stocks that were in the 200s. This is in 1900s money, $200 a share, that went down to pennies over the course of 2 or 3 years. Just an absolute wipeout of investor capital. These things happen. Narratives. Just look at what we've gone through with this whole pandemic narrative. I mean, people were absolutely certain that Peloton, was going to be, I don't know. I don't know what they thought Peloton was going to be. It is um, it's an exercise, it's a home exercise equipment in a world where we know people buy home exercise equipment, use it for a few months, and then never touch it again. All these IPOs, I think, what was it, Spotify or Shopify? I mean, all these IPOs had these incredible narratives. And we're seeing the value of narratives really kind of come back to reality. And Bitcoin is different, yes, but it's not. It's still, the price of Bitcoin is still made up by humans, and humans are emotional creatures. So, yes, it's different. This time it's different, but it's not. So, on that note, let me bring up a link that I made a note for. Hey, what's up? See some people joining Discord. What's up, Frank? Let's see. Live streaming. Oh yeah, ATVI. What? Share me the link. Give me the link on that, Frank. Yeah, I'm going to look at TLT here in a minute. Again, if you're just joining, if you have stuff to look at, shout out in chat. So I have been saying this for a while about Michael Saylor. Around 69K last year, a friend of mine, a very eager Zoomer, age about mid-20s, was literally upset with me because I did not agree with his thesis about Bitcoin when it was trading at about 65K. He could not understand why I would not buy Bitcoin at 65K. And I told him, look, young man. I have been doing this since before you could drive. I've seen things. Yes, it makes me jaded, but the nature of Bitcoin is that it goes up a lot and it retraces a lot. And so if it's gone up a lot to 60K, it could go up to 100K. But I know given some time, it will come back to 60K. And he didn't like that. And he tried to get me to listen to a bunch of Michael Saylor podcast. He tried to get me to read the book, The Bitcoin Standard. I didn't really need to. And so and since Michael Saylor was this religious figure among the Bitcoin maxis, I'll say that kind of in the past tense, just because everyone's kind of given up on their heroes a little bit, not completely. I have been watching his fund's activities. He has contributed in no small part to the rise in Bitcoin because he's put in almost $2 billion of borrowed money in a low interest rate environment into cryptocurrency. People have this notion that they have such a big stack of wealth of cryptocurrency because they were super smart. Yeah, you needed some intelligence, but you're in a high inflation environment where this cheap money had to find places to go into, had to find assets to go into. That's why real estate went crazy. That's why crypto went crazy. That's why the stock market was crazy. And now that they're starting to turn down that money printer, which is still going burr, just slower burr, that's why you're seeing this fall off. The speculation is going away. The money printer's dried up. People are like, oh, wait, you mean that line of credit is going to cost me like 5% instead of 3%? You mean that this adjustable rate may go up as the Fed raises rate? Ooh, maybe I don't want to invest in something that has 120% realized annual volatility. Maybe that's not such a smart thing. So there you go. And plus, as interest rates rise, people will be able to get some money out of bonds. Actually, we've talked about the I bonds recently. $10,000 a year you can put into it through the Treasury directly. And I think now, this week, you can get over 8% locked in for, I think, 30 years. And it even increases because you actually get compounded returns on the interest. It's a very unique bond. And you can get it, American citizens, yeah, or just anyone in America, $10,000 a year. It's not as fun as cryptocurrency, but it's literally risk-free, over 8%. Okay. Yeah, I know it's not a Lambo. I'm not going to get you a Lambo. Anyway, in MicroStrategy, Michael Saylor's company, their earnings call this week, he mentioned where his point of a margin call is. They have a fractional loan out, which is very common in the DeFi space, but you can also do this through corporations. Essentially, hold on. Okay, so LTV, I'm not sure what that stands for, but what it basically means is they put up, let's say, $1 billion of Bitcoin, and then they borrow 25% of that as cash. I'm not sure what the price they did, but we can probably do some math and figure it out. So what happens though is when you get to 50% of that, whenever Bitcoin comes down 50% from the value, now he needs to put up more Bitcoin as collateral to satisfy the requirements of the loan. So it's sort of like when you take out a mortgage on a house, you put 25% down of cash, and then they give you the cash you need to buy it. It's leveraging. This is actually the inverse of it because, actually, hold on. I don't want to say something wrong here. I need to do some more research on this. But here's the thing. 21,000 is not where he gets liquidated, but it's where if he doesn't put up more collateral, more of his Bitcoin, he would get liquidated. So he gets a margin call. So at $21,000 Bitcoin, MicroStrategy is going to be pressed to do something. Probably not sell at that point. But if this is a 25% LTV and the margin call occurs at 50%, if 21K is his pain point where he has to start putting Bitcoin up for collateral, it makes you wonder where the liquidation point is. Let's just say it's half that. His liquidation point is, let's say, 10,500 based on this. Where did I say that the max drawdown historically has been? At least twice in history, Bitcoin has come from top to bottom, 85%. What is that? Where is that? Where is 85% off of the high? 85% from the recent high, 85% is 10,300. That's my buy price. It may happen before then, I don't know, but when Michael Saylor gets liquidated, I'm a buyer. I'm not saying this has a high probability of happening, but what this is let's just call it a low probability, high impact event. The risk reward is spectacular on this kind of event. You're having someone forcing to be sold into a bearish market. It's going to push the price down because he has to dump these on the market somehow. People are already going to be giving up on Bitcoin. There's going to be very few buyers out there after this much of a down move. People are going to be saying Bitcoin is dead, yada, 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 yada. That's what you need to buy. You do not need to be buying Bitcoin when everyone says it's going to be the standard of money and every country is going to adopt it because they can't trade in dollars. That's not when you buy. You buy when Bitcoin is dead. But the key thing that I think about here is all these numbers, Michael Saylor's liquidation, the historic drawdown, it's all coming together. I'm not saying it's going to happen. It may not. I hope for my friends it doesn't. But I can see it. I can see the documentary being made, The Great Folly of Bitcoin, that will have Michael Saylor's story going back to 2013 in his tweets where he said that Bitcoin was a scam up to the point that he became the Bitcoin messiah, got everyone into it, put this endangered Bitcoin. Oh, he's going to be a pariah. He's going to go from messiah to pariah because he took borrowed money and bought Bitcoin. But my friends, this is what mainstream adoption and institutional involvement mean. You thought that institutional involvement meant that JP Morgan was going to buy your Bitcoin, didn't you? No. It means that you have other human beings, they just happen to have a lot more zeros, human beings that make mistakes, putting dangerous, risky bets on the cryptocurrency that you love. Nothing changes about Bitcoin. Nothing changes about the fundamental principles of it. It's still secure. It's still an immutable store of wealth. But the price of it, you put that in danger. You did. Well, there's that. All right, let's check comments. How am I doing today? I'm great. I can't wait to tell my story why. I got 30 minutes to do it. What do you think of Bitcoin for the next few days or weeks? Well, if you can scroll back, because I just told you, but I'll give you a quick recap. Same thesis from November, Hamoud. We're in a crypto bear market. My target is 10K. So for the next days and weeks, it's going to test these supports. If you're bullish, you better hope that it comes off of them. If it breaks these supports, if it breaks 36K, if it breaks, because I mean, it's again, 50% retracement of this whole move up from COVID low up to the all-time high. That's your 36K. And you got a lot of lows here. You got a lot of lows that can come down and people can look as a buying opportunity. But I'll tell you something. If we get a close below 33K here, then we're going to retest these lows around 30K. And then if we get a close below there, then my friends, don't, never mind. I don't want to be responsible for people's financial future, okay? But if it was me, and this was a good friend of mine, I would say, dude, get out and wait until everyone else is just absolutely despondent. You can always get back in. It's okay. But if you take out these supports, you're going to my target. And I'm going to be sitting there watching, waiting for my opportunity while everyone else just keeps hoping it comes back. You need to be hedged. You need to have hedges. You do not need to be 100% long cryptocurrency. But I could be wrong. This is a support. We'll see. All right. Today's price action is brought to you by the letter R. How's that? How's that, Hen? All right. So let's look at what you were going to look at. Berkshire. Yeah. I'll tell my story at the end because I want to talk about this. All right. So let's switch gears. Activision Blizzard, again, one of my high conviction trades of this year. This is, for those that aren't familiar, you're welcome. You're welcome. Hey, look, you may not like my answer, but it's just my opinion. You do your own work. So recession, it's not a recession yet. We have 1 quarter of GDP contraction. We do not have high unemployment. We do not have the second quarter. All those things. I mean, recession. The standard definition is 2 quarters of GDP decline, and then like your other qualification is high unemployment. I think maybe over 5%. Let's call it. Those don't need to be it, okay? But they also need to kind of come together. Then you have like an official recession. Yes, the fear of recession is there because I mean, look, we were afraid of COVID variants. We were afraid of interest rates going up, which they have. And then we were afraid of World War III breaking out, and it didn't. So what is CNBC going to talk about now? Recession. I was talking to a mortgage broker today, and he was trying to get me into an adjustable rate mortgage. He was trying to get me into an adjustable rate, and he said, "Well, we're going to have a recession here within 3 years, and they'll have to lower rates again." I was like, okay, that is your opinion. It may be true, but being in an adjustable rate in an environment where the Fed could lose control of inflation and have to go full Paul Volcker and raise rates to double digits, and I'm sitting in an adjustable rate, that is what you call a catastrophe. And while, again, it's a low probability event, just like the Michael Saylor example, it's low probability, high impact. Mortgage payment every month doubling is something that would not kill me, but it would definitely make me very, very upset. Very upset that I had put myself in that situation trying to save a little bit of money. Yeah. So, all right. Activision Blizzard. So, this is a merger arbitrage. What that means is Microsoft has agreed to buy out Activision, all the outstanding shares, for $95. That means if you own shares of Activision Blizzard, they will buy them no later than June the 12th, 2023 for $95. So if you bought them today at $78, someone will pay you $95 for them in June of 2023. Now, why would they be at such a discount, you might ask? Very good question. That is where the arbitrage comes in. There is FUD, there is fear, uncertainty, and doubt that this will actually go through. They think that regulators will see them as a tech monopoly and block it because right now the current administration is very, very vocal about corporations being bad. Well, the problem with that narrative is that this would only create the third largest gaming company. Um, yes, it's big, but it's not the biggest. So it'd be very, very difficult to argue that this is a monopoly because it's not even the biggest. The shareholders have already approved it, but there's still that FUD out there. And of course, the market has been going down as well. There's also a little subtle difference in this, too. If you think about it, because rates are going up, the risk free rate is also increasing. Okay. And what does that mean? That means that you could put your money into, let's say, that treasury, that I bond, and get 8% risk free. Okay. Why take risk when you can get 8%? All right. This has risk. And so, what you're trying to get out of this, if you bought it today, is you're trying to get a 22% return over the next, are we coming up? Well, let's call it a year. Okay. Yeah. We're coming up on a year. So 22% return a year. But if you compare that to, let's say, a risk free rate, you're only really getting about 12%. And historically, what's interesting over the last few years, 12% has actually been a very common merger arbitrage number that you've seen. So essentially, if you put your money into Activision shares, if you bought them, what you're expecting to get, should the deal go through, it's really a binary event. Does it go through or doesn't it? You will be bought out for $95 a share for a 22% return. Now, if it happens in June, that if you bought it next week, let's say May, and then it happens in June, you are well within those 12 months of long-term capital gains. And so that's another benefit. And so as you get closer within the year, that's going to change the calculation a little bit more, actually, because you're going to have to pay taxes on short-term capital gains, which are going to be less. So it's going to be interesting to see how that timing actually plays into that. But last week, you see where you had another dip. The fundamentals of it, the trade did not change, but the risk went up. Excuse me, the reward went up. But again, it's all about, is the Biden administration and its regulators going to block this? That's the 22% you're getting paid. If the deal doesn't go through, you are left with Activision Blizzard shares. Do you like the company or not? I kind of do. I wish they would do better with a lot of their products. Actually, I don't like them anymore, but they still make a lot of money. They have Candy Crush. Okay. Candy Crush makes them a bunch of money. People still play it. I don't know why. But let's just say that it didn't happen. You would probably fall back down to the pre-announcement price, which would be about $65. So you probably stand to lose about 16% right away, paper losses if you didn't sell. So it's a slightly better, honestly, than a 1-to-1. Even if it doesn't happen, of course, it could go lower. But these are the kind of things that I look at here. I still like this. And okay, let's bring up the article. Warren Buffett. Oh, look at that. Oh, look at this. Warren Buffett agrees with me. I wonder, does the article say when he took that stake? I wonder if he just announced it. Okay, Warren Buffett said on Saturday that has taken. So recently. So Warren Buffett has entered into this merger arbitrage trade. So he's doing the same thing. So he thinks that they will. And he's probably thinking the same way that I am, that if it doesn't go through, he'll be left with Activision shares, and he likes the company. Buffett said will file a report records if the stake reaches 10%. So he's still buying, apparently. Okay, so they had accumulated last year, but he made clear he's responsible for the rest. So they have been buying based on this because he wants to make 22%. Who doesn't want to make 22% on their money? Crypto people, that's who. 22% doesn't buy a Lamborghini. All right. So there's that. Okay, TLT. I want to talk about this too, and then I'm going to finish out with my story that I want to share. I want to have it for posterity. So I've been following this guy. This is TLT we're looking at. This is the way that people invest in bonds, the price of bonds. And the price of bonds are inversely correlated to rates, interest rates, because if interest rates go up, then the value of bonds sold with lower interest rates goes down because they'll pay less money. That's the gist of it. It's really not that much more complicated than that, but just understand that. And so as rates are going up, and oh my God, are they? As I've been looking at mortgages this week, the value of bonds are going down. So TLT's been going down. Now, most people in history, recent history, people that are, let's call them boomers, they have their stock portfolio based around this 60-40 stock bond dynamic, where 60% of your assets should be in stocks and 40% should be in bonds. The theory is that the 60% of stocks is going to grow, but you still have this nice, slow growing but stable portion here that will grow slowly. And then ideally, what they do in theory is they are inverse. And for the last 30 years, that's been true. And that's why people have assumed that that is a good thing. But actually, Chris Cole, he runs a hedge fund, Artemis Capital. I've been listening to a lot of his podcasts and reading his white papers. In 2015, he published this, Volatility and the Allegory of the Prisoner's Dilemma. See, I love that. I'm going to write a white paper like that about my spikes and stuff. I'm going to attribute it to some philosophical concept. He looked at the last 132 years, and he found out that this correlation that people assume is actually false. Stock and bond prices have historically moved in the same direction roughly 70% of the time, and in the opposite direction just 30% of the time. The last 20 years have been pretty good, with bonds protecting investors when stocks sank. But essentially, if you look back at 132 years, back to 1885, starting 2015, things might have changed, but this whole thing people have assumed that this is a good balance is not true. In fact, it's the exact opposite. And so that's been hurting a lot of people that have been using this strategy, especially people that are getting close to retire and they're trying to shift into bonds. I don't, it's going to be rough because as interest rates rise, bond prices will go down. So the value that people have in bonds, a bond is going to have a value. Let's say you have a $10,000 bond at, let's say, 5%. I don't know where you're going to get that now, but maybe you can now. Well, if interest rates rise to 6%, why would you want this $10,000 bond at 5%? Why would you want 5% when you can get 10%? Excuse me. Why would you want a 5% yield when you can go and buy a new one for 6%? It's supply and demand. I don't want. Why pay less? Well, that means that the 5% bond is worth less. And if you wanted to sell this bond, if you wanted to get rid of it, people will pay you less, like let's say $9,500, even though the face value is $10,000. And so that's why this relationship exists between rates and the valuation. So if you have a portfolio of $100,000 worth of bonds at, let's say, 3%, as they've been for the last couple of years, and then rates suddenly go up and you can get bonds at 10%, well, you're going to lose maybe, I don't know the numbers, but you're going to lose several, like maybe even 20-30% of the value that you could sell them for. It's horrible. And the reason I have this up on here is I took a trade on TLT back in the beginning of April and stopped out. And I actually had a little debate with people on another Discord. They're like, oh, well, I'm DCAing into TLT. I'm like, okay, well, that's not how I roll. I like to have fixed risk and reward. And you see now, this is my 1 unit of risk. Let's say that I allocated 0.5%, or let's just say 1% of my portfolio to TLT in terms of loss, not an allocation, but risk. In other words, from here to here, this move would have taken away 1% of my portfolio total. Well, I got out, and if I'd stayed in, I would have taken not only this, this is 1 unit of risk. This would have been the second unit of risk. This would be down 2%. This would be down 3%. This would be down 4%. And now it'll be down about 4.5%. Instead, I got out, took the loss, and I'm only down 1%. I just like doing this. Yeah. This is how I roll. It's not standard for what most people seem to want to do out there, but this just makes so much more sense to me to cut your losses. And it didn't make any sense in the last 2 years, but man, has it made sense? I mean, let's that example I bring up in every single live stream where I talk about Zillow. It went down on earnings this week yet again, like almost 10%. So Zillow got out back around 100. It's now down at 37. I like the company. I use them, but I don't want to have the stock anymore. And I've avoided all this. All right. I think I've covered everything. Okay, so that phone call I got at the beginning has to do with story time, which we're going to round. Actually, let me check the comments here. Alexander says, "What about connection crypto indexes? Meaning yes, they have been following each other. If indexes bounce, crypto will bounce as well. If the correlation continues, unless it decouples soon, right?" And when I say bounce, I don't mean all-time high bounce, but decouple anytime in the future. So, look, again, people talked about institutional involvement and widespread adoption. They love to talk about that in the last couple of years because it would make their bags worth more. But what you ended up happening is by making it mainstream, you now have cryptocurrency. It has become a risk asset. People put their capital into it, expecting a high rate of return, and when that becomes shaky, well, you get the backside of that. You get the backside of volatility. You get the drawdown, the huge drawdown. And the reason they're working together is because, well, here's it. Risk on, risk off. If you have a day where people are like, yeah, let's go bullish, then everything goes up. People are feeling like taking risk. If people feel more conservative, it goes down. And so, look, cryptocurrency is a speculative asset. I know people think it's more than that, but right now that's what it is. It's just as if you're speculating in a tech startup. And that's why they're all moving together. It's because we're getting in this risk off type of mindset that the market is. It doesn't want to take risk right now. It's getting conservative. It's getting protective of capital. And what happens when people get protective of capital? They want dollars. It's funny to me. This is the DXY. This is a dollar currency index. This is the dollar relative to other world currencies. It's been funny to me that all year and all last year, we've been fed this narrative that inflation, the dollar's going to fail, the dollar's going to fail. If you had put your money into dollars, by doing that, you would borrow in the Forex market, you would borrow another country's currency. Let's just say, let's look at the dollar yen. Let's go to Forex and let's look at the dollar yen. So if you had gone to a Forex brokerage or a bank and you had borrowed yen to buy dollars, in other words, you take a loan of yen and you buy dollars, you would be up on that position. Where are we? There's third. 13%, 13.5%. Much better than being down whatever you are on tech stocks. Now, could we have seen this coming? No. But this is an example of how narratives are, you just need to assume they're BS. You really do. I mean, listen to narratives to inform your thesis. It's such a tricky thing. But, why is this happening? Why is this happening? It's because rates are rising in the US. When interest rates are risen by the central banks, the value of their currency goes up because it's harder to borrow. It becomes more scarce. The value goes up. All these other countries, Great Britain, Japan especially, they have not raised rates and they're actually continuing to devalue. So you're getting this double whammy of the dollar having the desired effect that the Fed wants, which is going up in value. Well, they don't desire that effect because it hurts our exports. But the dollar value is going up because interest rates are going up, whereas every other country is keeping theirs low and even pushing them lower. And so you're getting this real spread, this true spread of currency rates. I mean, if you would just let's look at back in a monthly, like historically. Oh, how much? Okay, so that's back to 06. Okay, so this is the dollar yen. And so at one point back in 2006, it was at 117. In other words, 117 yen per dollar. It came all the way down in 2011 to 76. So basically, the yen became a lot more valuable versus the dollar. You could buy more with yen. And then they, pushed it back up, and now they broke it out. And so you have a low point right here. We're going to start talking about Forex this summer and probably in this year, because now that you have a difference in interest rates, now Forex can actually move. Forex has been really boring. Who talks about Forex anymore? Nobody, because everyone for the last 5 years has been focused on cryptocurrency, and the last 2 or 3 years have been focused on stocks. When I came up back in the old days, Forex was the way to go because you could start a small account, you could have tremendous amounts of leverage, and it traded 24 hours a day. Cryptocurrency kind of took away that market of people. But now you're going to start seeing some movement in the Forex space, and there's money to be made. And so you'll see me talking about that a lot more. I actually closed out my Aussie CAD trade that I had that I put on in the beginning of April when it did this spike, but one of more to come. Okay, I got a few minutes. Story time. So I posted this on the Discord, and I want to share this, guys, with you. You never, I did not believe that things happen for a reason. I still kind of reject that notion, but some things happened this week that really make me think that, yeah, maybe things do happen for a reason. So I was, I'll be a little personal here. I was in a relationship, and that relationship ended. And so I moved. I was kind of part-time living with her, and I moved back in to my condo here in Atlanta. And so that put me here full time. I also started dating someone new, and I have a motorcycle. I actually had an accident a year ago where someone pulled out in front of me, and I had to put it down. It hurt a lot. I didn't think I would ever ride the motorcycle again, but I have a reason to. I want to give her a good time. So I was out on Wednesday working on my bike, getting it fixed, getting it ready to ride, and a guy pulls up in a truck, and he's eyeing me. He's looking, at me working on my bike, and I'm like, "Hey, what's up?" And we get to talking about bikes, motorcycles. He's a big motorcycle enthusiast. Picture this: he's like me. He's like my size, 6'2", 6'3", about my same build, but a long blonde beard. He's like a Harley guy, and a long hair, blonde, but with a little bit of gray. It's almost like he could be my older brother, and we get a really good vibe going. And what he's doing here is he's in from California. Just Wednesday was his first day. He's leaving on Sunday, and he's here to clean out and sell his condo. Now, the condo, I can see it from my window right here. Okay, it has this really big, nice courtyard. It's got a 2-car garage and extra parking spaces, which is a big deal here at this condo place. This condo was always going to be a rental. This is an investment property. I'm not really proud of it. It's small. It's not. It's good for me, but it was always going to be turned into a rental. I asked him for a tour. We went around, and I looked at it. It's so unique. He's done custom woodwork on the fireplace mantle. The bedroom is really awesome. The natural light that it gets is really cool. The office is really cool too. And it even has this little special thing where there's a shower that can open to the bathroom and to a sitting area. Now, why that's good for me is because I like to meditate to running water. So now I can sit and listen to the shower run and meditate. I have a meditation. Oh, excuse me. Anyway, all these things are amazing. And so I asked him, like, what are your plans on this? And he said, well, before I leave, I want to list it. And I said, well, what are you gonna list it for? And he said, well, 350 is what I'm thinking. So I was like, okay, I got his number, and I walked back to keep working on my bike. And I called my realtor friend. I said, hey, I'm about to do something crazy. And well, realtors are not going to talk you out of a deal. He said, go do it. So I walked back up to him. I said, so you want 350 for it? And he was like, yeah. I said, I'll take it. He reached out his hand. We shook on it. And that night, my buddy, my good friend, realtor buddy, got the paperwork drawn up. I went under contract on Thursday. And this is a great place. I have a 2-car garage for workshop, car, charging a Tesla. Top of that, I can actually probably put like chairs and planters on it to grow stuff. The courtyard is big. I can have great barbecues and parties there. And the place itself is fantastic. I just need to redo the kitchen. Kitchen needs to be updated. That's the only downside to it. But it's so cool that in this market, just being in the right place at the right time, all those events, and a love of motorcycles, led me to meet this person at the right place, right time in my parking lot. Have a great rapport with them and do a handshake real estate deal in the current year of 2022. So that's going to be a change that's coming up. This is going to become a rental. So that's a change in my investments. Look, I've never done something that spontaneous before. I tend to think way too much about investments and things like that. But that just felt right. And so I went for it. And I'm blessed that I'm able to make those kind of decisions, especially in this current market. Look, guys, I'm hurting too. Like it's crypto's down. I'm not too hurt by that, but stocks are down. If you follow me, I'm pretty transparent. I'm not happy with with the theses I've had this year. But look, we're only 5 months in, and maybe if this market is the way it is, I do need to be looking at real estate. And this popped up, went with it. So real happy. I'm glad to share that because if you are facing a lot of losses, if you are down a lot, you never know what's going to happen on a random Wednesday. Never know where you're going to be. Never know what trials and tribulations of your life are going to put you in the right spot at the right time. And look, I didn't necessarily believe that until now, but I can't deny that maybe this happened for a reason. So thank you for listening to that. Thank you for joining me on my live stream. I do this every Friday, except next Friday. I will be on vacation, so I may miss 2. I might try to do one from my location if the internet's good, but definitely not next Friday. Yeah. So thank you all. Click the links. Join on Discord. I just want to talk to you. I don't charge for it. I just enjoy having a community of traders to share things with and get ideas with. So join there. Twitter, do all the social media, like, share, subscribe, help me get the message out. I hope you guys have a good weekend.